So Arnaud, welcome back. I'm making you a panelist and I'm going to unmute you. And we're using Zoom now, Arnaud, so.
Yes.
Okay, how are you, bro?
I'm good. How are you?
Good. So there's a green box that says share.
Okay.
And then you just click the screen. See that?
Yep.
Okay.
And then, oh, sorry, I forgot to push a button.
That's okay.
There we go.
There you go.
There you go.
All right. Wow.
You
Okay.
covered everything. I don't think I have to say anything.
The chart? Yeah, you have it all labeled, that's for sure. So.
Oh yeah, we try to do our best.
Okay, so welcome back. How have you been?
Thank you. Pretty good. A little bit under the weather the last week, but I guess it's the season. But hanging in there, trying to figure out what this market is up to, what it really wants to do going forward, and what it has been doing. It's been a little bit of a tracking nightmare, so to say. But once we get back to good wave counting, it starts to clear up, I think. So.
Where do you think we are?
Well, we are higher than we were last year, that's for sure.
Yeah. I mean, what from where we are now going into year end, you're thinking new highs into year end? Is that where you're 3 or C?
Yeah. So here, I've showed the Nasdaq 100, the NDX, with one of or several of possible other wave counts I'm tracking, and if we go, can you see my cursor, by the way?
Yes.
Okay, excellent. So if we go to last week, we had, just a 2-3 day pullback. It definitely didn't go as low as I would have liked to. If I actually go to, for example, my short-term S&P chart, I would have liked to see the market drop a little lower to about 30.75, 30.60 ideally, and then rally. But if it's a strong bull market, most often we just don't get the depth of the retrace that we're looking for.
Yeah.
Why was I looking for this type of retrace? Because of the prior one we had all the way back in early October, which went to 28.92 in cash and 28.85, I think, in the futures market. I was a little bummed because I did tell my premium members to buy at 28.85, but cash market never got there. And the next day, it opens, you already start chasing it. And since then, it's just been a relentless move higher with very few dips to actually trade, unless you're really accurate. So we've just kind of let this thing do its move higher, and at some point the move always exhausts itself and needs to reset. So that's what we got last week. We had a timing window, November 22, 20 or 1822, for the market to kind of start digesting its recent gain, and that was what it did. Now again, I would have liked to see it lower and then rally, but this is pretty much all we got. On the Nasdaq, we can see it held this trend line that's connecting with the April high and here with the July high, so that's a strong sign.
Well, maybe we still get it.
Yeah, it's possible. Fourth waves are.
Or maybe we're just going to go. Where does new highs at C come in, or 3C? Is that 3140?
Yeah, that is.
Oh, that's Nasdaq. Yeah, okay.
This is the Nasdaq. So
Yep.
here I have just drawn horizontal resistance and support. That's about at 8,500. If I go to the S&P 500, sorry for switching, I'd like to see somewhere going between 3134 and 3157, and it's following these Fibonacci numbers as usual quite okay. Last 2 weeks ago I said we'd go to 3127. And
what's a TF on this chart?
This is what hourly. Sorry.
Oh, okay, hourly. Yeah. Okay.
Mm-hmm. And so I think if we move above, I would say 3120 on a closing basis, which already seems to be the case if we go here to the futures.
Yeah, we're there.
We're there already. I think we're going to go higher. You can see the futures have already traded to 31.32. Cash didn't get there, so I think cash market has some catching up to do. That would get us to the 31.34. This is a red 100% extension, and if I switch back to the Nasdaq, what is the red? It is this label. If we do this move here, which is let's see, some labels have fallen out. Thanks, stock charts.
And this is a daily?
This is the daily, yes.
Okay.
So then we have 9 waves up. 1, 2, 3, 4, 5, 6, 7, 8, 9 to here, I believe it is. And then we go down here, and now we're here's a label that fell away as well. So we have 1 wave up, 2, 3, 4. If we go higher, we should get 3. We never know beforehand if we are dealing with a C wave higher or 5 waves higher, right? We need to let the market know. You cannot know with any certainty if it's going to be a 5 wave move. If we start at a low, you just don't know if it's going to be 5 up or just 3 and then go lower. So you got to track it both as an A and a number, or a C as a 3, till we have actually 5 waves up. If you put just a 1 and a 2, you're kind of intellectually dishonest because you cannot know with all certainty. But you do know that the C wave moves higher. You do know that the 3rd wave moves higher. So you know the direction of the market is higher. So that's fine. Then at some point the market will just let you know if it's going to be 5 or not, and then you kind of know better what the bigger picture is going to look like.
What's your weekly outlook, Arno?
So yeah, so here I'm kind of looking for a marginal higher high on hopefully negative divergences on the relative strength index, on my buy-sell indicator, on the MACD, which has already given a sell signal. You can see money flow is not where it used to be. There's less money flowing into the market at these higher levels, and it's a liquidity game. So that's not going well. And so somewhere I would say this week 31.40. Then I'd like to see a 2-week pullback at a minimum before we start rallying again. So I would like to see a Sena rally. I know everybody's waiting for it. I hope I won't screw the pooch on that one.
Yeah. So is it possible that where you have C and 3 labeled on either alt or the C3 question mark, that could be actually 5 up there?
No, I don't think that's going to be the end of this rally. And one of the main reasons is very simple. If we're going to look at market breadth is, I think, the telltale of what is going on under the market. And one of the best indicators, I think, is, let me go here to the monthly. This is the advancing declining line for the NYSE. And so far, the monthly line is still pointing up strongly. There is no divergences. We need divergences here, like in 07 and in 2001, where the market goes higher and less stocks are participating. We get this negative divergence. We had the same in 07, 06, 07, 08, where the market went higher, green line, but less and less stocks were participating. We do not have that on a monthly time frame.
Okay, so we could be good for another, what's your outlook? Good until the elections of next year?
Yes, yes. I do not see a bear market around the corner anytime soon. Can we get a correction? Yes, absolutely.
Well, the nature of 5 to 10%?
Yes, very normal. They happen quite frequently. And so if I go one time frame shorter, which is the weekly NYAD line, AD line, like in 2018, we had negative divergence. And in 2015, we had negative divergence. That means we get a pretty decent correction, 15 to 20%. That's what we had back then. Now here, these green arrows and these boxes show that actually we can even get a correction without any divergences on a weekly time frame. And like, for example, 2018, here at the beginning, we had a pretty scary beginning of the year. There was no divergence at all on the weekly time frame, and it has happened here in the May correction we had. There was no negative divergence. What it also means is that after this correction, the market will go higher. If you do not get these divergences on a weekly time frame, we do get a decent correction, but it will also tell you every single time since this bull market started in 2009, the market will go higher. Now, if we zoom in even more to the daily time frame, we can see here in 2008, in January, we had very tiny negative divergence, right? The market went higher, but the market breadth was not confirming the high. It made a lower high. Same here, we're kind of pushing, in my humble opinion, the boundaries here of what is still sustainable. We've been pushing higher in November, but the advancing declining issues line cumulative is not confirming this move higher. So we might get a decent correction like in August or in May on our hands, which would be a pretty much a standard 5% correction. I mean, nothing really to, and after that, I think we're going to go to new highs again because there is no divergence on a monthly, no divergence on the weekly. So I think we'll just get a good, decent, shake out the weekends correction coming.
And then a melt up.
And then a melt up. Yeah, I think there's no sign anywhere in breadth that we're going to enter a bear market then. I'm sure the headlines will be full of bear markets. I just don't see it based on this, because the advancing declining issues is kind of like a liquidity line. It shows that a lot of stocks are participating, but right now on the daily time frame, we just simply see less stocks participating on this shorter time frame. We need to see it on a very
and
long
is that happening in the S&P too? It's happening on the NASDAQ?
No, that's another issue.
Okay, so that, I mean, I was noticing that technically too, because a lot of the FANGs aren't making new highs here. I know
right.
Maybe half of them are.
Right.
And they used to be the leaders. So it seems to me like there's more cracks in NAS 100, and even the chart looks weaker than the S&Ps.
I agree. It's been a large cap rally, which is one of the signs of a ending bull market. Let me go back here.
You mean when the generals lead without the troops?
Pretty much.
Okay.
I think it's been kind of brushed away by a lot of people, but it's quite obvious. So here I have plotted the S&P 1500, which is I think 90 to 95% of market capitalization. Then we have the S&P 500, the mid cap, the small cap, the weighted average cap, and then the NYA. And you can see the 1500 is moving new all-time highs. Of course, the S&P 500 new all-time highs. The mid cap still no all-time highs. It made an all-time high September last year. It's still lagging. Can break out, but it's still lagging. That's not a healthy sign. Small caps, I mean, not even close. I mean, can still break out. It's still lagging. The weighted average, still lagging. No new all-time highs. The NYA, still lagging. So these are still signs of an aging bull market, not the signs of a new bull market.
Right. So but you think they could keep the balls in the air and have a melt up in a year?
Oh, absolutely. Yeah, absolutely.
And is it strictly going to be Fed induced?
No, I mean, the Fed, of course, has a thumb on the scale, by providing additional.
So these cracks are only but cracks that don't cause any fractures for another year.
That's my opinion. Yes, that's how I see it. The underlying indexes show it's not a rising tide lifts all boat market anymore. That's what we had up till 2018, correct? Everything was rising.
Now you have to be a stock picker.
It's becoming more of a stock picker market. Just like you said, not all FANG stocks are there anymore. I think Facebook hasn't made a new all-time high. Netflix is way down. I wouldn't want to touch it. Google and Apple, of course, is going really strong.
Yeah.
That one also looks to be in its final move higher.
Amazon's not making new highs either.
Amazon either. No.
And that was a darling.
Oh, absolutely. Ago. Yeah, absolutely. So it does show the rising tide is not lifting all boats. So something is not working properly anymore. It can always change, right? It can always change, but for now we have to use the data we have at hand, and the data at hand shows, well, this rising tide is just not lifting all the boats. Even the strong stocks like Amazon, Facebook, Netflix, they're not the darlings of Wall Street anymore. Yes, there can be sector rotation going on, but the sector rotation is to really big cap. Big cap is safe. Apple won't go away anytime soon, so you rather want to invest in Apple. Smaller companies might be much more economically sensitive, and they might actually close the doors once we hit a recession. The recession is not being announced yet by the liquidity charts. Now, could the Fed have been, I would say, skewing that chart? Yes, of course, because there are, of course, putting extra liquidity in the markets. Right now, they're doing the
What do you
repo
think is
intervention.
behind the Fed's actions in the Fed funds market, overnight repo market?
Well, that is a trust issue, correct? The banks are not willing to lend to each other.
Yeah, why?
So I don't know. I don't work for those banks, so I couldn't
Yeah,
answer that
no
question.
guesses, or
Well,
is it a canary? Have you ever seen it before?
a canary in the coal mine? Yeah, of course it is. Everything is always a sign that something is going on that is either going well or not going well. In this case, if banks don't want to lend to each other, I think it's mostly between US and Europe.
Oh, okay.
It's not a good sign that these banks are not willing to lend money to each other because they don't trust each other. So
Yeah,
then the
Brock
banks
is
that
saying it could be Deutsche Bank, or maybe it's
possible there's
HSBC.
definitely been some rumbles going on there. I
Yeah.
don't really follow it that much, but I heard some
Okay.
rumbling going on there a couple of weeks or months ago. So maybe under the surface it's not going so well, and maybe in 5-10 years from now we all go like, oh yeah, that's what it was. But um, yeah, I'm not an expert in that. I follow the
Okay.
stock charts. That's my that's my
Okay, buddy.
expertise.
So, why don't you let the audience know how they could follow you on Twitter and perhaps show your website if they have an
Sure,
interest in
sure.
following up here?
Yeah, let's see. Well, you can always follow me on Twitter here. Let's see, where's my profile? At Intel Invest, and where I post intraday stuff. Some is funny, some is weird. Your example was interested in what people thought about the new Tesla. Um, this is, by the way, Subaru window. It's much stronger. Where I post intraday stuff from either myself or some of my work by my colleagues. Here I have my financial astrology expert, Mr. Kumar, who posts some stuff on what they're following using financial astrology to predict the markets, and looking on where the market is intraday. I have a few private Twitter feeds where I post trades, and I follow crypto currencies as well, where you can sign up for. Unfortunately, my website has a server issue, so it
Oh, okay.
doesn't look so great
Okay,
right
so
now.
you're doing Bitcoin now, buddy?
Yeah, I'm also doing Bitcoin, believe it or not.
Okay,
Yes.
very reflexive market. Quick view on it before we say
Um,
goodbye.
I think we're gonna bottom here. Let's see here. I think I have a Bitcoin chart here. I think we're gonna bottom here at around 56.70 somewhere at some point, and then
Okay.
we're gonna have a nice fat bull market coming for the years to come. But I think we have to shake out. I was already thinking after these 2 days rally with the bull market had started, because we just came off the 62%
Yeah,
retrace.
right.
But it had different intentions, and that's what happens sometimes. So we had to reassess the charts. Let's go to actually, I think this one is probably a little better. So we have 5 waves down. This is probably a B wave up, and we're going to follow here another 5 waves down. It is insanely oversold. We'll probably get a nice oversold bounce, hopefully a marginal lower low to the 76% retrace, which is an absolute normal 2% retrace, wave 2 retrace, and then we should rally. That's
Yeah,
my
the money
opinion.
wave coming up. Some fib extension of
Yes,
one, huh?
yeah, we have a
Okay.
nice impulse here from the 2018
Yeah.
low. Timing wise, I see this somewhere hitting the low early December. That's my timing wise. For those who want to trade the Bitcoin fund, the Grayscale Bitcoin Trust Fund.
Well, Arno, Santa is getting a little bit old, and it's much easier on his back to carry around crypto than
Yeah.
all those big packages. And Rudolph, too, his nose isn't as bright as it used to be. And so, he actually, Santa used super glue and put a Bitcoin on Rudolph's nose. So anyway, I really wish you and your subscribers and your community a great holiday trading season,
Thank
Arnaud.
you. You too, Dale. Absolutely.
And
Yes,
yeah,
absolutely.
thanks for coming back, and may pips rain down on you, not rain down on you, snow on top of you like a blizzard.
I'll take that.
All right, buddy. Thank you.
Thank you very much. Have a great day.
All right, everyone, my trading warrior brother Arnaud, check him out. That's a wrap for us, everyone. Have a great day. See you for Tuesday. Remember, don't just count your pips, count your blessings. Adios.